What's going on, guys? Let's talk about the stock market today. So, CPI data numbers came out before the market opened, and you can tell, depending on what time you woke up or what time you started looking at the candlesticks, that we were down pretty significantly. The triple Qs were down to a price of $279. Now, CPI data numbers came in hot. What I was assuming, if the CPI data numbers came in hot, which they came in hot, I was expecting some sort of washout in the pre-market. Any type of bounce or recovery going into the market open was going to immediately get stuffed at a level of hourly supply. One of the levels that I was looking at was the 1 hour chart here. And let me kind of just pull this up and let me zoom in a little bit so you can see the aggressiveness of this candle as soon as those data numbers got released. Now, as we started to kind of eat up a little bit of those selling pressure losses, what I was expecting to see when the market opened was to come into this level of supply here, which was going to be the linear regression. When we got above it, I noticed that we had the 5-day moving average on the 1 hour time frame. I was expecting some sort of rejection going to go on here within that first 30 minutes to an hour after the market was open, and then I was looking for the market to chop around and then come down and flush through the 279, and let's go ahead and put in those new all-time lows, right? Or not all-time lows, but at least getting back down to some of those lower levels, 275, low 270s. That did not happen whatsoever. Today was one of the weirdest days in the overall stock market. Does that mean that we're going higher tomorrow? Not necessarily. This market, it's got PPI data numbers coming out. We can completely roll over, wash out those 279 lows, put in a new low, so forth and so forth. I am so far beyond trying to guess what's going to happen in the market. And I think right now, and what a lot of people have kind of noticed the past 8 months, is that if you start guessing or assuming something's going to happen, the very exact opposite is going to happen. Today was also one of those days where you could have very much over traded, and if you have a smaller account, a couple of losses could have really put you down in the hole to where you weren't able to kind of get yourself out of it. Now, I took a little bit more trades than I wanted to today, 100,000%. Okay. Market showed me that it wanted to go lower. Then at one point in time, it looked like we were going to go green, and did in fact go green on the day on the index. And then, we started to get a little bit more weak. So it was kind of like, there was only two things that realistically you could have did: turn off your computer screens, say the hell with this, come back tomorrow on a better day or a better overall price action day, or kind of just try to crawl and inch your way out of either some negative drawdown, or try to add on to a very, very small win that you may have put in early in the morning. Right off the bat, I entered into an SPX put option that very quickly went into the money, and I think I was up around $400 or $500. And within 5 minutes later, it was completely sucked back up. I ended up losing $1,600 on the trade. Took 2 or 3 more SPX trades throughout the day. Luckily, was able to catch one of the flushes towards the end of the day to not only recover my losses, but put my overall P&L in the green. And doing this for 7 years and about 5 years full time, I will be the first to admit I overtraded today, and I was lucky. Not only was I saved by the market, but I was sitting in an SPX put when we had one of the most aggressive 5-minute candles that I have seen in a long, long time. Literally 11 a.m. Pacific Standard Time. As soon as the new hours candle kicked in, it had just immediately started to flush. Luckily, I was in that to the downside, along with a couple of members from my Discord as well. We were trading live today pretty much all day in Discord. And, luckily we were able to catch that, break even, and or go a little bit green on the position. So getting back to what's kind of going on here and what I'm looking at with the triple Qs, if I just take a look at the daily candlesticks here. Now, why the aggressive turnaround and bounce after the initial sell-off didn't really mean much is because we were under so much supply levels, right? So still under the 20-day moving average, still under the 5-day moving average, still under the 50-day moving average on the triple Q. So even as good as a run that the Bulls tried to put up today, was still having a horrible time trying to break green, trying to have continuation, trying to get that follow through, because we are still trapped underneath a lot of levels of supply. As you can see here, we came up and almost tagged this 20-day moving average here on the daily time frame before it was rejected and pushed back down, not only below the 20-day, but also below this 10-day moving average. Now, going forward, here's going to be my game plan. Obviously, anything can change tomorrow as soon as we get those PPI numbers, but what I'm looking at here and what I want to stay true to, at least to finish the rest of the week, as long as the triple Qs as a whole are still trading below $290, which is the 5-day moving average, I need to let the stock market, if it's green, just go. Okay. No matter how good the move looks on a 5-minute chart or a 1-hour chart, if we are trading below 290.25, I need to just ignore that and wait for the rejection. Typically, the longer I'm sitting in calls, especially the past 8 months in a bear market, the more money I lose, the more times I get chopped around, the more times I get stopped out. My bigger moves, my bigger gainers have always come to the downside, at least the last 5 to 6 months, for sure. Okay, now have we had areas of opportunities where we get 1, 2, 3-day dead cat bounces? I'm playing to the long side, yes, but the majority of the plays when we have a little bit of a choppier day or when we're in a downward short-term trend like we are here from when we got rejected off the 50-day moving average on the 8th, we're 1, 2, 3, 4 days consecutive making a lower high. So what this is telling me is that if you're looking for long plays in this type of environment, you're going to get frustrated. You are going to get upset. You're going to let emotions kind of get the best of you. You may be over trading. You may get stopped out more than you want to. And if you have a smaller account, you may end up trading all of your trading your whole entire account balance just to try to get yourself in the green. That's never what you want to do. You never want to be trading down to the last 30 minutes of the market open unless you're holding a winner and it's just pretty much a runner that you've already collected gains on. One mistake that I did make today, I was trading all the way up until that last hour of the day to try to get back some of those losses, and I caught myself in that process. But again, as long as you can understand some technical levels, you can kind of give yourself the best opportunity to try to at least make some money back on a winning trade if technically it looks good on the chart. With that being said, I'm going to stay away from the longs underneath $290.25. The moment we get back above that, I will play back to the long side as we have room all the way to 295, which is a 50-day moving average. Now, what I'm looking for is if the market continues to reject off the 10 and 20-day moving average and we roll through, there will be a little bit of a trade opportunity here below 284.60 down to today's lows of 280. That's about 4 points worth of room, 5 points worth of room. Currently in the after hours session, we're down about maybe $1, just shy of $1. So that's going to all change. Obviously, by the time you wake up, we can completely gap down below $280, and then the whole game plan changes because now we need to see the new levels. But macro wise, anything below 279 has room down to test these prior 3 days where we had these low prices here before we started that aggressive bounce, and that low wick is about 275. So anything below 279 has room to 275, and anything below 275, take your favorite tech stocks and look to short them through their previous low of day into the next demand zone. Now for the triple Qs, that next demand zone, major demand zone, is sitting at around 271, 272, which is going to be this lower Bollinger Band. This Bollinger Band is also starting to contract. So as it gets tighter, I would expect moves to be a little bit more choppy. It's not until the Bollinger Bands completely restrict and then we break through or above when they start to really expand again. And the more expansion that you get in the Bollinger Bands, the less you're going to want to trade to the opposite side, just because you don't want to get caught. So just think of it like this. Once we contract these Bollinger Bands. And let's say, for example, we do break to the bottom. As soon as those Bollinger Bands start to really expand and get far apart, that's when you're going to want to start to take profits, and you're going to want to let the Bollinger Bands contract again. If we break out to the top side, the same thing. Once we get really very over expanded, then you're going to want to take those gains. You're going to want to look to the nearest level of supply, and you're going to want to repeat the process. I hope this video kind of helps. Just again, in short, anything over 290.25, I'll be looking a little bit more long biased. Anything under 280, 279, I will be more short biased. Everything else in between, again, not saying that there won't be opportunities for a scalp, but it's going to be a lot more choppy, and it's going to be a lot more slower price action and a lot more fake outs. I hope this video helps. I will see you guys all in the next trading video. If you guys would like to trade with me each and every single day live, I will be trading live on voice chat in Discord a lot more, at least 3 to 4 times a week. It's great for newer traders and even experienced traders to get alongside other traders who are doing this on a day in and day out basis. Not just to take plays blindly, but to learn from other traders, learn what they're seeing, learn the levels, learn technicals, have feedback, be able to interact with other traders. It helps the day go by a lot faster. It helps give you a little bit more clarity. And sometimes when you're not thinking straight, you have someone tapping your shoulder to the right of you, telling you, hey, you know what? Maybe this is not the best trade to take. Maybe you should take some profits here. Maybe you guys should cut this trade here, so forth and so forth and so forth. With that being said, guys, make sure to like, comment, and subscribe to this video. I will see you guys all on the next one.